Hi, I'm Jimmy. In this video, I'm going to walk through my top 5 dividend stocks from the publicly traded real estate sector. This video is part of our Passive Income from Dividends series, where our goal is to find dividend stocks from each of the 11 sectors that can give us the passive income that can help us get closer to each of our own goal of financial independence. There's a link to all the other sector videos in the description below. This is the final video in that series. Okay, so to make this top dividend stocks list, well, we created a few basic rules. They have to have a current dividend yield of more than 2%. They have to have a decent dividend coverage ratio, which means that they need to have the profits to cover their dividends. And then ideally, we want them to be in a position to grow their dividends going forward. Okay, now for most of the industries that we've done so far, to calculate the dividend coverage ratio, we take the profits of the company, known as the earnings per share, and then we divide that by the dividends per share. That gives us the dividend coverage ratio. But the real estate industry is a bit different. Instead of earnings per share, we're going to use something called funds from operations, or FFO for short. To calculate funds from operations, we need to make a few adjustments to net income. A lot like it's very similar to the way you would adjust net income to come up with free cash flow. We're adjusting things like non-cash charges like depreciation or amortization, and then one-time either gains or losses if they were to sell a property or something along those lines. Okay, so let's jump in with our first real estate dividend stock. First up, we have Digital Realty Trust, ticker symbol DLR. They have a dividend yield of about 3.5%. Now, what Digital Realty does is they own technology-related real estate, things like data centers or server farms, things along those lines. They own properties in both the United States and over in England. So this is what Digital Realty's dividend history looks like. This goes back to 2011. And clearly, they've done a good job of growing dividends, and it looks like analysts are expecting for that dividend to continue to grow in the coming years. Analyst expectations are the green bars. And then when we add funds from operations to this, well, we can see that funds from operations have consistently covered their dividends, which is likely a good sign for the future of their dividend payments. Okay, next up, we have another real estate investment trust called Extra Space Storage, ticker symbol EXR. Extra Space has a dividend yield of a bit more than 3% right now. Okay, so as we might have guessed, Extra Space Storage is one of the largest self-storage property managers in the United States. Now, when we look at their dividend, well, we can see that they've grown their dividend quite nicely since 2011. And then when we add funds from operations, well, we can see that broadly speaking, they've been covering their dividends. Now, their coverage ratio was a bit low back in 2015, but luckily for their dividend, they've improved that since that time. Okay, so I'm a fan of what they bring to the table. Next up, we have Crown Castle International, ticker symbol CCI. They have a dividend yield of about 3.3%. Now, what I like about Crown Castle is that they're one of the companies that own many different towers used for wireless services. Now, this has really been a hot topic lately with the emergence of 5G, and that could play a key role in the future of Crown Castle and ultimately their success as a dividend payer. When we look at their dividend history, which really started around 2014, but mostly in 2015, well, overall, they look decent. When we add funds from operation to this, well, we can see that typically Crown Castle pays out a large percentage of their funds from operations as dividends, which is frankly one of the advantages of companies becoming a real estate investment trust. They get tax advantages if they pay out the majority of their profits in the form of dividends to shareholders, which explains why it looks like so many of these companies are just barely covering their dividend payments in the form of funds from operations. Okay, so that explains why they have decent dividend payouts and also why their coverage ratio is fairly low. Okay, up next, we have Welltower, ticker symbol WELL. Right now, Welltower has a dividend yield of about 4%, and they focus on the healthcare and senior housing sector. Given the aging population of baby boomers in the US, Welltower is likely to do well over the coming years. And then when we look at their dividends per share, well, we can see that they have a decent dividend per share, and then we add funds from operations. But once again, funds from operations have broadly covered their dividend, with the one exception being back in 2017. But since then, they're once again covering their dividends in 2018, and analysts are expecting for that dividend coverage to continue to improve over the next couple of years. Okay, along the same lines, we have another REIT in a similar space called Ventas, ticker symbol VTR. Ventas has a dividend yield of a bit more than 5%. When we look at their dividend history, well, it's been fairly steady outside of the pullback in 2016. And it seems that expectations are that they will continue to grow their dividend for the next few years. But now when we add funds from operation to this, well, here it gets a bit more interesting. My hesitation with Ventas is this sort of flat line that they're showing in their funds from operation. Now, they're still covering their dividend, which has a decent dividend yield at a bit over 5% right now. And I believe that the long-term sustainability of their business is promising. They own a lot of medical buildings and hospitals and properties focusing on the healthcare industry. So I like it because I like the company because of their solid dividend, but I did hesitate because of their growth. So I figure we could do our own research and see this might be one of those companies that is worth a deeper dive. Let me know in the comments below if you think it's something I should do a deeper dive in, and we could see what we can uncover with this one. Now, if we are interested in the higher yield world of real estate investment trusts, I actually did a REIT primer video that could be a good next video to watch. I've got a link right here and a link in the description below. And I want to thank you so much for sticking with me all the way into the video. I really appreciate it, and I'll see you in the next video.